Well, hello and welcome to this Moneycontrol live stream. I'm Nandita, Khemka, and with me I have Latha, Venkatesh, and we'll be talking about the MPC as well as the FOMC minutes that were released last evening. Talking about the MPC minutes, Latha ma'am, there was a deep division within the MPC about the 25 basis point rate hike that we saw in the previous policy, right? Now, both Governor Shaktikanta Das and Deputy Governor Michael Patra believe that inflation is the biggest threat and this may not be the time for a policy pivot. However, the external members, three of them, are against this prognosis of going in for rate hikes anymore. You spoke to three of the external members yesterday, right after the release of the MPC minutes. What is their argument? Tell us more about that.
Okay. Well, first of all, of the external members, one is with the RBI. Two of them are, they voted against the rate hike. Just a word before I come to the external members, the Reserve Bank members' minutes were not more hawkish than what they told us in the press conference. They were more or less, in fact, it seemed a little ameliorated, actually, a little more benign. But they are definitely worried that they were not convinced that the December inflation going down is good enough. They kept saying that is only because of vegetables which are seasonal. The stickier part is core.
That also, the inflation data also came after the policy,
yes,
right? So that also,
that is the next point. So after the February 8th policy, we have got February 13th, the inflation data, which was horribly,
above
shocking
target,
compared to what was expected to come below 6%. It's come a good half a percentage point above 6%. So this, to that extent, gets a little outdated. Now, I was talking to the external members who opposed, trying to find out if they are not that opposed to the rate hike now because the inflation data is bad. Those two members were not terribly convinced. Dr. Verma still maintains that we have already hiked. Now growth will start falling and inflation will start falling. So if you keep on hiking, you will actually lead to hurting growth. So he was not convinced even with this inflation data. And likewise, the other member who actually voted with the governor, Dr. Shashank Bhide, he said, see, maybe December was one-off. It was not that low an inflation. It was more veggies. But even January may be a one-off.
Right.
So he says he will be data dependent and, progress on how, say, if extra heat has led to the wheat crop going down and therefore cereals continue to remain high, then that will be also something that will concern him. So what I could say from the discussion and with Dr. Goyal also was very insistent that no, there was no need for that rate hike. We've already done enough. Let's wait and see what impact it is having on inflation. Let us allow it to play out. But both Bhide and Goyal did say that they will be data dependent. That if this, El Nino effect and cereals becoming expensive and summers getting longer impacts the crop and the prices, then they may change their mind. So short point is, for me, it looks like April is very open.
Okay. April is open, even though the governor, I think it came as a surprise, his hawkish tone in the policy, right, that he has left the door open for another 25 basis points. But do you think that 25 basis points, if it comes in April, would be the last one, or he would keep the door open for further rate hikes?
I don't think that there is 100% chance that is the last hike. There is a substantial chance it is the last hike because of one thing they say, what they call positive real rate. Now, positive real rate is the difference between the repo rate and the inflation rate. Now, inflation today is 6.5, but they are expecting that by next year, the average they are expecting is 5.3,
right.
and the end of the year is 5.6. So at 6.5, 5.6 is already 90 basis lower. There is a positive real rate of 90 basis. If there is one more hike, it will be 675. So the positive real rate will be almost 1.25. A little more than that. That is substantial. And the tone in which the governor and Michael Patra are arguing, monetary policy is already in restrictive terrain. We have already entered positive real rate. Gently we have nudged it to positive real rate. So you can interpret their argument to mean that probably that 6.75 is the last one.
Okay.
But who is to say what data will bring.
Data will bring, exactly.
The global rates, Fed also, we thought is going to have one more rate hike. Now the average on the street is three more hikes.
That's what, in fact,
Right.
even the FOMC minutes came out last night, and
Absolutely.
there's division of whether the next hike should be 25 basis points or 50 basis points.
There is a few who are arguing.
So we've already seen foreign investors being sellers in the Indian markets. If the terminal rates move towards 5.5–6%, say by the end of the year, then that would mean more outflows for Indian markets. What would you say?
It can mean, because it can mean strength for the dollar.
Right.
But it also means that the economy is strong. That is why they're asking for more rate hikes.
Yes.
So it will be a very volatile market. Whenever there is strong economic data, the market will also push up EPS.
Yes.
But at the same time, it will also say that there will be more rate hikes, and therefore the recession, when it comes, will be swift and deep. So there will be volatility.
Right.
If that is the, if we are going towards 6% on FOMC, I think we are in for some very volatile times, with markets swinging in favor of growth on some days,
Right.
and swinging in favor of a deep recession later on in the year on some days. And our own MPC will be influenced by, or at least RBI will be influenced by the external events. So at the moment, it does look like April is open. There is a substantial chance that the rate hike, if it comes, will be the last rate hike. But even that we can't say 100%. Because there is an El Nino that people are talking about, there is definitely a possibility of higher inflation for longer.
Last question to you, ma'am. The Q3 GDP data is expected next week. Are you factoring in anywhere around 6.5% or thereabouts, or what is the expectation on street if you have spoken to analysts?
I must water down your expectation. It's more likely to be 4.5.
Oh.
Okay, the average, we have not completed our poll, but it is more likely to be something like 4.6, which most economists are saying is better than expectation if it comes to 4.6. Because until a few months back, we were working with 4.2. Now, why is 4.2 considered good? Because last year, we were in this quarter, the third quarter that we are talking about, October, November, December 21, we were coming out of a terrible delta. And so consumption just went through the roof.
Yeah.
Over and above that, 4.6 is a damn good number. It was not a normal base. It was an extremely active base.
Yeah.
Very high base.
High
So
base,
over
right.
that, a 4.6 is actually very good growth. So don't be carried away by the fact that we are nowhere near 6, we are not even 5. Oh, it's a bad number. No, it's not a bad number, because the base was very huge for 21 October, November, December. And therefore 22 October, November, December at 4.6 is a damn good number.
Right, I think we'll be watching out for that, and I'll get you back here to discuss the GDP numbers next week as
Thank you.
Well, with that, it's a wrap on this Money Control live session, but for more news and updates, stay tuned to Money Control.